Welcome to the Big Fat Real Estate Checks podcast with Marco Kozlowski, where we help investors like you get the knowledge and skills you need to replace your JOB with passive cash flow for life.
Hey everyone, welcome to Big Fat Real Estate Checks. My name is Marco Kozlowski, and I'm joined with Francesco Galluccio, and we are missing our third musketeer, Gabriel Adaish. And I don't think we've done one of these in a very long time without Gabriel. He's usually the keener. Don't worry about Frank. Let's just do one anyway. Leaving Frank in the dust. But today he is not able to join us for this session. We're going to be discussing LOI for a no, which means letter of intent when you're making offers with the intention of getting a no. We've sort of brushed this through other podcasts. And speaking of other podcasts, if you have not listened to at least the first 10, the number of fingers that you should have, unless you've lost one in some sort of accident, you need to listen to the first 10 because that explains exactly how we get into asset-based lending, why we can get money without using any of our credit, because we use skills instead of money to buy as many assets as possible. And we do this every single day. And we'd like for you to do this every single day so you can replace your active income, things that you actually have to work hard for every single day to get a paycheck, into passive income where you work once and get paid for a lifetime. And your children's children can get paid for a lifetime as well. And as inflation pushes and drives the cash flow and the value of your assets higher, you're building tremendous amount of wealth using real estate debt as your friend. And that's all we do. Actually, we do a lot more than that, but we like to have fun helping others as well really achieve financial greatness very, very quickly, provided that you're putting in the time and the effort as well. So welcome, Frank. We were just discussing prior to this some followers of ours who are still eager to get a yes, scared to get a no, and I really want to get into this big idea. Oh, forgot. If you are not subscribed yet, please do. My producers are going to kill me if I don't say this, so like us, love us, follow us. Please let your whole tribe know as well that you're learning a lot and can action some of this stuff, so you can really derive as much value as possible, which is really our passion to give and give you some really awesome tools and skill sets that you can use for a lifetime. So back to LOI for a no, which of course stands for letter of intent or some sort of offer where we are our intention when we make one is to get a no. So, which is really counterintuitive because most people want to make an offer to get a yes. Oh, I made an offer, I got it accepted. You paid too much. And there's some psychological, I don't want to say you have psychological issues for doing that, but there are processes that are psychologically based in order for us to do this correctly. So let's just say you're going to have to tweak your mindset a little bit to understand why we do it and why it's so powerful. So Frank, take it away.
Yeah, let me just add to that. I just want to back up just a little bit why agents or even sellers ask for an LOI. Most of them, and we just went through one as an example, students, and most of them are non-binding. They just want to see where the buyer is. And for the most part, realtors do ask for an LOI only to go back to the seller and say, look what I did. Look at all the LOIs I got. Look at all the offers I got. But also they want to test out the terms because sometimes price is not the motivating factor when they do get an offer. I know, when we talk to many sellers and, they said, well, we got full price, but the seller rejected it. Well, why did they reject it? Was it cash and with no contingencies, or was it quick, whatever? So the LOI is a twofold. For the agent or the seller, it's to feel out who's going to be the quickest with less headaches, with less contingencies, whether, that buyer is looking for financing or whether they put a condition that, hey, if we buy this property, we want to rezone it. So it's for them to go back to the seller and say, look what I got for you guys. And from a buyer's perspective, Marco, most of us, unless you're educated, you send out an LOI in hopes and pray to get a yes. And really the intent, if you follow Marco's teachings, is the intent when you do an LOI for a no, it's just a starting point. It's the runway you're taking off. It's to start the compressing of the gap. So you got to start from somewhere. So, and again, we don't just give an LOI freely as soon as they ask for it. We actually have, a strategy where they kind of beg a little bit for it. And then only when they do that, we strategically give it to them with certain conditions in there, where it's really attractive, like the terms that is, and maybe the EMD, like, which is the deposit, but maybe not the price is not the hottest things. And that's just a starting point in exchange for hopefully a strong counter. And that's the whole purpose of it.
Correct.
Yeah.
And we're positioning that we're wanting to close quickly. We're ready to put a large sum down upon acceptance. And again, 1 out of 1,000 might say yes. And in that case, we have to do a little bit more due diligence to see what's wrong with the property, because it's very rare. But our position is we're going to, and when Frank was saying we get them to beg first, it's actually true. We have people begging us to make a very low offer. We tell them, listen, I'm going to make you an offer. It's going to be low. You're going to hate it. And I honestly rather just not even do that. I don't want to hurt anyone's feelings. And when you do a takeaway from a psychological point of view, saying, listen, I'll make you an offer. It's going to be cash. We're going to close right away, but you're not going to like it. It's like saying I have a lot of candy and I'll give you some, but I don't think you're going to like the number of candy I'm going to give you, and I might actually hurt your feelings. It's really good candy though. And your counterpart is going to be like, well, wait a second. I want to taste this candy. Show me the candy. And most people want what they can't have. So by doing a takeaway or a pull strategy, you're going to get those that are more motivated to come forward and say, okay, we're open to something that's lower. Show us what you got. And we'll disclose that, again, not going to like it. It's going to be low. And we do expect something that's going to be strong as a counter. So the objective in an LOI, again, it's a letter of intent. It's just a letter with the intention to make some sort of numbered offer, with an understanding that it's non-binding. An LOI is non-binding. You could put, I'll buy full price, put all the money down today, and that I'll give you a car, and you can, take my wife and my kids. It's non-binding. It's just something that's written on a piece of paper that they can bring to the seller, as you said, which is the job of the agent to get the best, highest price, the best deal for who they're representing. That's their responsibility. That's their fiscal responsibility to do so. So nothing wrong there. It's just we want to present ourselves as a strong cash buyer. Here are the terms that we're going to have, which is very aggressive, very low price, but very aggressive closing terms and deposit, which is very appealing to a seller if they're motivated to sell quickly. Yeah. So, we're expecting a no, right?
Exactly. And that's the biggest mistake a lot of people do is when they put something, an LOI together, and they put an offer down, they put an offer on where they want to end up at, which you don't do that. You never put an amount where you want to end. So that offer has got to be substantially low, so it gives you negotiation power later on, because you're expecting that no, and now you have some leverage in between where they're at and where you're at. But if you show all your cards all at once and on your first offer, then you got no negotiating power, and that's going to be pretty shitty. And you may not get to the closing table, basically.
Well, you look like an asshole because you haven't given yourself room to go up at all. Yeah. Like you're painting yourself in a corner, saying, okay, well, here's all the marbles I have, and I don't have an ace of spades. I don't have a way to get out of this. This is the most I can do. And it's really going to piss off the seller if you're making a very low offer and they come down. And let's say you're only missing, 3% to get no money out of this deal, because with asset-based lenders, there's a threshold where if you, for example, they'll give you 70% of the value of the asset and you're at 73%, and you've offered exactly 70. You can't go up, because if you do go up a penny or $1 or $10, 1%, you're bringing that to the closing table because you have to, because you've made a commitment. Again, it's only an LOI. It's not the end of the world. You can always say, oops, I made a mistake. See you later. But it's way easier just to offer a lot less and then come back anyway. And so I think mistake number one is making offers that are too high, understanding that you should get a no. And the big question mark is why? What makes you not want to make an offer that gets rejected? If our intention is to get rejected anyway, what's the problem? Why aren't more humans that are in the business making lower offers? That's a real question mark.
It is. And well, I don't know the answer to that. They're anxious to get it. So when people want something, they're going to pay for it. And yeah, you're going to get into a pricing war. But even sellers, when they list a property for sale, they're not going to list it at what they're gonna hope they're gonna get what they're listing it for, but they know realistically deep down that if they list it for $1 million, they know they're not gonna get $1 million for it. They're trying to feel out the market. They'll make the market dictate what it is, the demand for it, and and then the seller, depending on their situation, what's their motivating factor to sell it. Then they may have some leverage. They, what, should I take full price? But this guy may take 6 months to close, and I don't even know if he's gonna close. Or should I go with this group that says they got the money and they're gonna close within a month? It's more attractive, so they're willing. Again, we're exchanging that speed for equity, right? That's what we bring to the table is speed for equity. And if time is not a factor for them, then that's great. They can wait as long as they want to wait, and maybe take a higher offer, but wait longer for it. But if those that want to sell right away for whatever reason, and they want money now, then they're willing to shave a little bit of the price in order to close now with less headaches, less contingencies. And that's the biggest problem that most of us do is. And again, there's a buyer's remorse and there's seller's remorse. It works both ways on both parties. So can you imagine if someone's Marco's selling a property for $1 million and you offer $1 million, and I've seen some of them really weird where they offered more than they asked. And you offer more, Marco's going to have second thoughts and say, shit, I could have probably got more if I held out before I agreed, to Frank's offer. And that may derail the deal, because now when I present Marco with with the purchase and sale agreement, there's going to be conditions in there that I want to verify income. I want these documents. Marco may already be bitter for accepting my offer on the first crack. And he may say, you know what, I'm doing Frank a favor, which you never want to be in that position. You as a buyer want to be in the position where you're doing the seller a favor. So Marco's going to come back and say, you know what, we're not doing this. You're not doing that. I ain't giving you shit. And that's where it could derail. And that's where we've seen a lot of train wrecks happen when people don't follow that process for that reason.
Very well said, Frank. But to distill also a reason is, if you're dealing with very non-motivated sellers, you're not going to buy that property at a discount. And that's where you make your money. You make money on the buy. So if you're just dealing with agents that want to sell everything for full price, and there are markets right now where there are bidding wars, right? You have to make an offer that's higher than ask, or like you're in Toronto. If you make an offer at full price, you're not buying this property. Or even in Orlando, speaking with a good friend of mine who's an agent, there are bidding wars that go 5, 10, 15% over ask, which in Orlando is very rare. It's just a sign of the market. So going after the wrong property is going to be problem number one, right? Because you're not going to be the highest ever, especially in my tribe, right? We're never going to be the highest, but we have certainty of closing. So if we and also listed properties in general are typically retail anyway, so we don't make a whole lot of offers on listed assets, but that's a whole other conversation for another day. If you have the right group of people and you send out 100 offers that are very low, and 78 of them say, screw off, there's no way you're even in the running, the other 22% say, hey, why don't we counter here? That's why we do it. It's for the others that respond in a positive way, that are open to a quick sale, that want out now. So if your strategy is one offer, lots of research, offer as much as I can, it's going to take you 100 years to get a really good deal. Our process is cast a huge net and make very low offers on 100 properties at the same time with very, very little thought. Just what's it make? What's it worth? Here's what we're going to offer. And we want no's. We're not doing it to get everyone to say yes. In fact, we only want a handful to say yes, so we can move forward with a good negotiation strategy that's very cooperative in the way that we do things, right? We're not combative. When you bought your hotel, you made a very low offer. You didn't want her to say yes, and slowly, you go up over time. Building time equity, which is a podcast that we just recently did. You should listen to that. And the more time equity you put in, eventually, if they're really needing to escape or get out, or are in a situation where they need money quickly, you're back in control, which is what Frank was saying. Is a lot of sellers, when they give a discount, they think they're doing you a favor, and it's really the wrong place to be in. You're doing them a favor by buying it, because you're using capital to close quickly, and that's what they want. They want a quick closing, a quick certain closing. And yes, it'll be less, but you're going to move on to whatever your next step is quickly with certainty if the price is right.
Now, we had those scenarios, Marco, where we did do an LOI for a no, and shit, they said yes, which again, if you know the formula, it's significantly lower than what they're asking. Basically, we're trying to find the floor, or at least close enough to the floor, or an impasse. And when you do get a yes, then that raises another other flags of concern. But again, I think we had to, on those scenarios where they did say yes, and we were expecting a no, and the student was expecting a no, but for some reason or another, the seller accepted and they dropped the price that much. And when they do that, obviously it's red flags. Why would someone on one email or one conversation drop the price significantly? And those cases, you know what, we do tie it up, and we'll peel the onion back later during due diligence, during our process, to make sure, what's the ugly that's in there, if there is one. If there isn't, then, you may have just caught, a lucky charm in that, basket that that net that you casted, and that happens. Diamond in the rough, man.
Even a blind squirrel can find a nut once in a while. You do 1,000 of these and you happen to get a yes from someone that really is motivated. That's the exact number they want. And comes back to buyer's remorse, right? Where, oh shit, they said yes. What's wrong with the property? As opposed to being happy, which is what most people would be. We're a little cautious. So it's the exact opposite of what behaviors most people have when they get into this. But again, we're going to tie it up. You can't steal in slow motion. You got to, send them the right agreement that protects us. We're not using agreements with interference. That's a completely other clause. With specific performance. Did a contract class earlier today. Specific performance has to have this, has to have that. And if you screw up, then they're suing you, your family. You're losing an EMD. We don't even give an EMD until after the inspection anyway. And by the time that we owe it, we've already closed the property. So we really don't have any money at risk at all. So I don't care how much of an EMD that I put in, which is what secures the property. I'll put $100,000 if I have to. And by the time they are owed the money, we've already closed. So who cares what the number is? So if you have the right knowledge and understanding of how everything works, everything can play in your favor without fear, right? And we want a no, not a yes. So and we live in the no. I think we have a podcast on this. Everything I do is based on them saying no, not on them saying yes. Because yes is easy. No is fun, right? It's chess at that point.
It is a mind shift to get a no to from a yes to a no, and that's, some people still are maybe listening to this podcast are still scratching their head like, oh, okay, I don't fully grasp why you want to know. Don't you want to buy it? Yes, eventually we do want to buy it if the numbers check out, but that's not where you're starting, and this is just a starting point in the process.
Yep, and all those no's lead to an impasse, and then once we have an impasse where they can't go any lower, then we do them a favor by buying it on our terms at their number, and it allows us to do all sorts of magical things. And that's why my process is called the AIM method. There's a response mechanism, which is the ABC response mechanism. I don't think we even discussed it on this podcast yet. The impasse, which I know we've discussed ad nauseum, and then the monetization of that impasse, either by buying it or doing something creative to help the seller get exactly what they want, and us make a ton of money by helping that seller authentically. We really do want to help a seller, and there are ways of monetizing the impasse in 20, 30, almost 40 ways. There's 39 so far.
There's a lot.
There's a lot, yeah. So just to wrap this up, the objective of an LOI for a no is for them to say no. That's why it's called an LOI for a no, to make a very low offer with an expectation of a counter. It's not done on a onesie twosie. It's done in volume. It's casting a wide net. And it's those that step forward, and if it's structured correctly, again, this is the shit that we do on a daily basis. If it's structured correctly and giving yourself room for negotiation and being okay with them saying no, being okay with them saying go to hell, them okay with whatever they say. And by the way, if they say go to hell, it means you haven't managed their expectations. They don't expect a very low offer with a quick closing. So there's an expectation gap that's there. So that tells you something based on the reaction. But if you do things correctly, they're cool with a very low offer. They're going to counter or say no, it's fine, it's way too low for us. Then we have a conversation around why it's too low for them, and we find out a lot about their situation, allowing us to help them later to monetize it. So it's a very neat process and strategy that can make you millions if you really harness the information that you're getting and structure it correctly. And it's made you millions, Frank. Every deal that I know you're in and bought has all been done this way.
I got a lot of no's and a lot of FUs and a lot of go away and go to hell. And, they come back and you follow the process, and some don't come back, which is okay. That's the whole point. It's okay. You're not everyone's buyers as well. Yeah, exactly.
Yeah, we're not everyone's buyer, and that's okay with us. And it's a numbers game. It's the 1 out of 100 that will buy, but you can monetize the other 99 if you are clear on a no, because I've said this before. If you say no to one thing, you're saying yes to everything else, which is really where you want to be. If you say yes to one thing, you're saying no to everything else. There's no more options because you've said yes. So it's very empowering to say no. It's actually the most power you're going to have is by saying no. It's very, very important. And for them to say no as well and know that you're setting them up for a no and exactly what to do next, because if they say no, they're doing exactly what they're supposed to do. So you can really navigate around how you want to structure this deal because they're supposed to say no. They're not supposed to say yes. So strategically, it's really cool to know you're supposed to say no. Good. I'm going to do this. You're supposed to say no. Good. And it's really neat to see how the deals come into fruition, and all they have to do is say no.
That's right.
It's magical.
It's a checkbox on the process. 100%.
Sure is. All right. Well, there you go. So if you want to learn more in this whole process, you know how to find us, I hope. Marco@marcokozlowski.com. Shoot me an email. Apply this. If you're already in the business, make offers that are lower and have fun with it and manage their expectations. Saying, listen, I'll write you a check now, but it's going to be low. It's going to be cash. You're going to hate it. Have them beg for an offer. And when they do, and you manage that expectation, have fun in negotiation, you'll see that you'll buy properties way cheaper, making you more money, because as you know, you make money on the buy in this real estate business, and in the cash flow business. The cheaper you buy it for, the more money you make on a cash flow basis, because your debt is on less money, so you automatically make more. So there you go. Like it, love it, share it. Frank, thanks so much. Gabriel, thank you so much for not being here today, because we got it done a lot faster.
Usually it's me that delays it. I'm usually me that drags it on, but it's all good.
No. We're all good. Look forward to seeing you in Vegas as well.
Yes,
I'm going to see
tomorrow.
Both Vegas. We're off to Vegas, the thrice of us, and private equity fund meeting. It's going to be a lot of fun, and I'm looking forward to your success as a listener. Subscribe, like it, love it, share it. Give us a great comment, please. We love 5-star reviews. We're trying to get to 2,000 before the end of the year, and we absolutely would be delighted if you participated in that and helped us out. Love to give you as much value as possible. Thanks so much. Have a fantastic, fantastic, fantastic month and year. Crush it. Crush it. Crush it.